Alright guys, welcome back to my channel. So in my first video I said I'll be making videos on important things to know in the market, what to look out for in the market, how to navigate through the market, how to understand the chart and the market entirely. So I don't want this video to be lengthy. I just want to give you a simple explanation of the market, and I want you to stick with me to the end of this video. And if you are coming across my channel for the first time, please do like, share and subscribe, because I know this channel is going to help you now and in the future, because I'm going to be giving you step-by-step guide on how the market works. So without further ado, let's start. Alright guys, welcome back. So personally, I actually categorize the market into two categories. Yes, two categories. So the first category is the one that has to do with the chart, the structure of the market, the fundamental aspect and the technical aspect of it. And then the other category is the one that has to do with our feelings, our emotions, psychology and mindset of forex traders. So this video I'm going to be taking you to what is very important, that if you know it, you've actually overcome a particular percentage of forex trading. This aspect is very important. It is the technical aspect of it. And then the first thing we are actually going to be looking at is the market structure. There is no how you are going to dodge this. You have to know it. It is the first thing you have to deal with when it comes to forex trading or financial market. The market structure, right from technical analysis to fundamental analysis or whatsoever that affects the market, it comes down to forming the market structure or the structural arrangement of the market. So it is very important to know it. And the market structure is just like a compound word. Yes, it's like a compound word. It has a lot of things under it, and once you know and able to understand and identify all of these things, I'm telling you, you are going to have improvement. It means that you have dealt with a lot percentage of the market. So let's start. So this is market structure, and under market structure, one thing I would like to introduce to you first is the trend. Honestly, the trend actually is one of the things that gave me serious problem when it comes to forex trading. Yes, because I was not able to differentiate between higher time frame trend and the lower time frame trend, and it gave me serious issues. But now I'm going to be explaining it to you in a simple form. Now, what is a trend? A trend is the general direction of the market at a specific period of time. This explanation actually means that um, the market usually focus on a particular direction. Yes, it focuses on a particular direction, and it doesn't just move towards the direction forever. Yes, there will be a point in time when it's going to be tired, it's going to exhausted and decide to move to the opposite direction. So and it used to be, it might be within a time frame of maybe a day, weeks or months. It's not going to be going to a particular direction forever. So we have types of trend. We have uptrend, downtrend. So the market doesn't just go to one direction. No, no, that is not how the market does. What the market does is that it's going to move to a direction, and then does as if it wants to come back, and then continue, and then move, and then continue, which means that the market actually focuses on going to a particular direction, even though it's trying to retrace, trying to do as if it's not more interested in going to that direction. But at the end of the day, you see that the focus of the market is towards a direction. So now, we have types of trend. Yes, we have type of trend, and the type of trend that we have is uptrend and downtrend. This is an uptrend. It is when the market focuses on going up to the upside, and the downtrend is when the market focuses on the downside. Yes, when the market focuses on the downside. So we have features. Yes, what are the features of trend? What are those things you are going to see to identify that this is a trend? And if you see a trend, what are those things? What are the characteristics, things that you see around it? So number one is support. Support. Yes, support. Support is just the downside of the trend movement. Yes, the downside of the trend movement. And then we have resistance. Resistance is the upside of a trend movement. That is resistance. And then we have in an uptrend, we see something like higher highs and higher lows. Yes, the situation whereby the market is creating an high, higher low and higher highs, higher low, higher highs. Yes, these are the higher highs and higher lows. Yes, it's a situation whereby the market is creating and higher high, higher lows, higher high, higher lows, higher highs, higher lows, and higher highs. And in the downtrend, you see the market creating what we call lower highs and lower lows. There's a lower high and a lower low, which means that the market focuses on going to the downside. Let me say this is a high, a lower high, lower low, lower high, and lower low. That is a downtrend. Those are the characteristics that you see in a downtrend. So we have what we call swing high and swing low. That swing high and swing low, they are actually you can call them a strong high and a strong low. So this area of the trend is called a swing low. A swing low. Yes, this place of the trend is called a swing low. Swing low. And here is the swing high. The same thing in the downtrend. This is a swing high and the swing low. Yes, they are very significant, very important when it comes to a trend. Yes, they are very important. And then what you see again in a trend is dealing range. This is another topic that I'm going to take you I'm going to make a specific video on. Yes, I'm going to make a special video on this dealing range because it is very important. Now I would try to just explain it a bit in this video. Now if you want to locate where your dealing range is, what is dealing range? Dealing range is the in that particular range that you want to take your trade from, where you are actually looking at that from here to here is where I'm looking at to take my trades. That is what a dealing range is. So that is where you want to deal with at a particular time. We have internal structure. What are internal structure? What are internal structure? Please calm down and understand this thing I'm about to say. Internal structures, they are just like lower time frame structure. Yes, lower time frame structure. When price actually creates something like this, let me use an uptrend for an example. So whatever I do on the uptrend is the same thing that would happen on the downtrend. So when price does like this, and price created a lot of reactions, and then price goes up like this. These are the internal structures. So these are lower time frame structures. You don't need to be confused. The market we want to confuse you, but you don't need to be confused about the market. So if you look at this kind of thing, it might be longer than this, it might be shorter, but the thing is, the market will not just go smooth as drawn here. It's not going to move very smooth. It will confuse you, but you have to. That is the benefit or the importance of knowing the difference between the higher time frame trend and the lower time frame trend. Is going to help you if you can differentiate it, and then the market can actually even come down and create all these noises and then create a kind of low equal low with this, and then at the same after some times it will start going up. It can even come down and then create a lot of noise and then goes up again. So if you look at this is an uptrend because the market actually is focusing on the upside, even though it's making a lot of noises towards the upside. That is internal structure. These stuffs are internal structure. They are there to confuse you. Yes, mind you, this particular thing is going to happen on the downtrend as well. Yes, so let's look at what we call break of structure. This one, it is actually important. You need to be able to identify correctly what we call break of structure. It is very, very important. So break of structure, it is the process by which price creates a high or a low and then created another high that actually breaks above the previous high. This is what I'm saying. Look at this stuff. Look at it. Let me do this. You see this? You see this? This is the easiest way to explain. Look at it. Price break above this high and then moves down and then break above this high. This is break of structure, and it is the process by which the body of the candle closes above the previous high. The same thing in a downtrend. Price break above and break below the previous low with the body of the candle, not with the wick, with the body of the candle. That is what break of structure is. So now you need to be able to differentiate between the higher time frame break of structure and the lower time frame break of structure. Now if markets start to create all these noises, you don't have anything to do with them. What you want to do is that you want to mark out this high and see if price actually close above, yes, with the body of the candle. It might be single candle, it might be multiple candle. You just need the market to close above it just a bit. If the market can close about it, that is a break of structure. So it means that um the previous low is going to be here wheresoever the market moves from to break structure is going to be the swing low. The same thing applicable to the up and to the downtrend. So we have what we call change of character. This change of character is very, very important. So the moment price starts moving to the upside or to the downside and then price decide to reverse and break the previous low in a particular uptrend, it means that price has decided that it's going to start going to the downside because these area are very strong. They are places that we are not expecting price to actually break. Yes, we actually expect the market or the price to come to this area even as far as much as creating equal lows with them and then continue to the upside. It must not close, especially with the body of the candle around this area. Never. If it does that, it means that the market has changed its bias. The market is no more interested in going to the upside. It wants to go to the downside. So the moment price break this previous low, it means that price has changed its direction. And then what you see next is that you see the price moves up and then continue to the downside. That is change of character. So the same thing applicable to the downtrend. This is the downtrend. Yes, market continues to create lower highs and lower lows, and then the moment price decide that no, it's no more going to the downside, and then it might create some kind of noises and then close above this high. It means that the market is no more interested in going to the downside. So now what you see is that you see price creating things like this and then continue to the upside. So this thing might happen between any period of time, any time frame. Could be a month, a week, a day, and a year, depending on the time frame you're actually looking at. And then don't be confused. Don't be confused. To understand a trend properly, to be able to understand a trend properly, you need to look out. You need to align the trend with the particular time frame you are looking at. Yes, if you are looking at the 4-hour time frame, make sure the break of structure or the change of character is in alignment with that time frame. Don't be confused by all those internal structure. Yes, they are inside back candles. You don't need to be, confused by them. So furthermore, I'll be making dedicated videos on all of these things, especially when it comes to dealing range, internal structure, break of structure, and change of character, even swing high and swing low, how it works. I'm going to be giving you simple explanation about how it works, and I know it's going to be very, very easy. If you follow me, if you follow my videos, I'm very sure you are going to understand this thing. So I want you to do something. I don't want you to, rush this too much, but I want you to learn fast, be vigorous about your learning. Don't have an estimated time for this. Yes, you don't need to have an estimated time. Anytime you are chanced, even over the night, you can watch videos, you can learn about the forex market, because it's all about learning. Yes, you learn till you understand. So you can actually take a concept and study it, learn it over and over and over and over, and it's going to help you. So if you actually like this video, or you learned anything from this video, please do like, share, and subscribe to this channel, because we don't know who and who actually needs this video. I don't know who my kind of explanation is going to work for. So you want to share this video, you want to like it, you want to subscribe, we can grow together. So traders, in every of my videos, I'll continue to tell you, to advise you, and to remind you that if you want to really understand how the market works, you have to apply this particular method. Yes, this is what I actually arrived at. Though for me, there was no one to tell me, but at the end of the day, I realized that some of the things I do, that actually makes it fast a bit for me. That at the end of the day, I was able to know how the market works. So I'll be taking you through these steps to advise you, to remind you, to always tell you that if you want to scale up faster, if you want to understand how the market works faster, you have to apply this method. So it is what I call willing to learn. You must be willing to learn. You must be willing, you must let something motivate you to learn. Let something trigger you to learn. Is it that you really want to improve your financial status? You want to be you want to have financial freedom, or you want to have time freedom, or you want to be a boss on your own, something important. Is it because of family or whatever? Something must motivate you to learn. And then the second thing is learn vigorously. Yes, learn vigorously. You don't need to have an estimated time, like, oh, in a week I'll go for tutorial, or I'll go for trading lesson or trading class, or whatever you call it, maybe twice in a week. I'm telling you, it's going to take time. It's going to take a lot of time. You have to be vigorous in your learning. You have to learn every time, every time. Oh, I did that myself overnight. Whenever I'm chanced, I learn every day. I watched videos every day. So the third thing is, don't rush things. Yes, you don't have to rush things. Though you might be vigorous at it, you might be learning every time, you might be watching videos every time, but don't rush things. And this actually means that you have to take it step by step. You have to take one thing and learn it, and then the other thing, learn it. You understand it, you digest it, then you move to the other thing. So it's going to make it much easier. I'm telling you, most people are actually compounding a lot of informations together, and at the end of the day, they do not assimilate, they do not digest the one they learned. Before you know it, they forget, or they don't seem to remember or identify it before they actually go into learning another thing. And then the fourth thing is that learn from people's experience, people's mistake. Yes, you don't need to wait until you learn the hard way. I'm telling you, if you are waiting until you learn the hard way, you will actually learn the hard way. You will definitely learn the hard way. You don't need to, wait until you become broke before you learn. Learn from people's experience, expert experience. Professional traders, say their story, what they passed through. And I used to discover that there is similarity between the life of all these forex traders when they begin. So you have to learn from their mistakes. You have to learn from it. I'm telling you, if you do not learn, you are going to learn it one day. The next one is listen to professionals. Yes, there's something I call listening to professionals. So when I was learning vigorously, I do watch a lot of videos and I saw professionals saying similar things like you have to be disciplined, you have to, you have to have an edge, you have to do this, you have to do that, you have to be patient, you have to be all these things. They mentioned all of this stuff, but there was no discipline to actually apply all of this stuff. It is not very easy to do them. So we actually have this mindset of making money in time. They will say you have to know that forex trading is not a get rich quick scheme. It's not a is a long time game. So but all these things we don't want to obey it. We don't want to listen. And if we do not listen, it's still what we are going to do at the end of the day. So this thing is very important. Try to listen to professionals. Yes, listen to what they say. And then the next one is seek for an edge. It is very, very important. Seek for an edge. If you finally found that edge, in fact, a lot percentage of your journey is going to be very easy, because that edge is what actually gave me confidence. All this discipline issue, psychological issue, and all those stuff, it become a bit easy for me because I saw my edge work out couple of times. Back testing it work out couple of times, and then for testing it work out couple of times. So I was like, okay, what am I looking for? This is a long term game. I can actually make money in this in the long run. So that edge actually gave me the confidence. I've not made the money, but I know in the long run I'm going to be profitable. Yes, this is my profitability stage. So like and follow this channel. Thank you.